Join me as I dive into the WBD stock crash and try to figure out if it's time to buy the dip or if I should just steer clear. Warner Bros. Discovery, a giant in the entertainment industry, has been making headlines lately with its stock taking a hit, and this is a topic that's relevant to both investors and fans alike, as many of us are eager to see what the future holds for our favorite franchises. The stock's decline can be attributed to a combination of market trends and company performance, with the entertainment industry as a whole facing increased competition from streaming services and shifting consumer habits. Recent earnings reports have shown some promising numbers, but they haven't been enough to offset the decline in stock price. Investor sentiment has also been influenced by the ongoing pandemic, which has disrupted production schedules and affected the release of new content. The company's efforts to adapt to these changes and find new ways to reach audiences have been hindered by the high costs of producing and distributing content. Adding to the complexity is the fact that WBD operates in a highly competitive market, with other major players vying for audience attention and loyalty. As a result, the company's stock has been volatile, reacting to every piece of news and every move made by its competitors. Warner Bros. Discovery's financial health is a topic of concern, with the company facing significant debt and intense pressure to deliver returns to shareholders. The latest earnings reports have shown some positive signs, but the company still has a long way to go in terms of reducing its debt and increasing profitability. Changes in management have also raised questions about the company's direction and strategy, with some investors expressing concerns about the company's ability to adapt to changing market conditions. The entertainment industry is highly competitive, and WBD faces significant challenges from other major players, including Disney and Netflix. The company's ability to compete will depend on its ability to produce high-quality content and reach audiences in new and innovative ways. Recent developments in the industry have also highlighted the importance of having a strong streaming service, and WBD's failure to establish a dominant player in this space has been a major factor in its decline. A significant event that could change the trajectory of WBD stock is the upcoming release of new content, including highly anticipated movies and TV shows. The company has been investing heavily in its production slate, and the success of these releases could help to boost investor sentiment and drive up the stock price. Another potential game changer is the company's plans to expand its streaming service, which could provide a major new revenue stream and help to reduce the company's reliance on traditional broadcasting. The company's ability to execute on these plans and deliver high-quality content to audiences will be critical in determining the success of its stock. If WBD can pull off a major hit, it could help to turn around the company's fortunes and send the stock soaring. The company is also exploring new partnerships and collaborations, which could help to drive growth and expansion. The announcement of a major merger or acquisition could also have a significant impact on the stock, as it would provide a major shake-up to the company's operations and potentially create new opportunities for growth. The main points to take away from the WBD stock situation are that the company is facing significant challenges, but it also has opportunities to turn things around. The upcoming release of new content and the expansion of its streaming service are just a couple of examples of how the company could potentially boost investor sentiment and drive up the stock price. Let me know what you think about WBD's future in the comments below, and if you're interested in more financial insights and analysis, be sure to check out my other videos for the latest updates and news from the world of finance.